Hi there, Darryl Wilson here from Affluence, and today I want to talk to you a little bit about our Affluence LIC Fund. Firstly, a little bit about Affluence and what we do. We have two funds available for retail investors in Australia and New Zealand, our Affluence Investment Fund and our Affluence LIC Fund. Now, importantly, all of our funds have some similar features. They target regular income and long-term capital growth, and they all do so by investing with a selection of underlying fund managers chosen by us at Affluence. The Affluence business itself is 100% owned by directors and staff, and myself and Greg Lander, who are the key investment portfolio managers, have been working together for over 15 years. The other important feature of our funds is that we work very hard to make sure that our interests as fund managers are aligned with yours as an investor. And so the first dollar that gets invested in any Affluence fund is our own money. We charge only a performance fee limited to 12.5% of positive returns. So that is, we charge no fixed fee for managing the fund. And we try to keep the costs low, where we actually bear costs over and above 0.25% per annum. Now, turning to our Affluence LIC Fund, we set this fund up in 2016. And we did so after doing a fair bit of work on the LIC space, and we discovered some things we liked about the sector, and that's led us to set up the LIC Fund. There are three reasons we were drawn to listed investment companies as an investment proposition. Firstly, there are a range of outstanding fund managers in LIC space managing listed investment companies. And the overall standard, we believe, is much higher than you'll get from managed funds in general. Secondly, there are now over 100 LICs available, and that gives a very wide choice. In past times, most LICs were focused on Australian equities only, and there are still quite a few of those around. But in addition to that, you can now access a whole range of other asset classes and investment styles through LICs, and more recently through LITs, or listed investment trusts. And finally, but most importantly, LICs are traded on ASX like any other share. And importantly, as a differentiator from ETFs and from managed funds, which always trade or transact at their net asset value, the price for LICs is set by the market itself. And what that means is that they can trade much higher or lower than their underlying NTA, or the underlying value of their assets. Now, to some people that's a risk. To us, it represents a significant opportunity to add value over time. In addition to the three reasons we liked LICs in the first place, there are now two more we can add where there's specific opportunities in the market. The first of those is we've obviously seen a fairly decent market correction from the highs of early 2020. And as I sit here in mid-May at the moment, we're about 25% below the peak of February this year. So there's a pretty reasonable value apparent in the ASX, and for the first time in quite some time, we feel the ASX in general is trading around fair value. And secondly, and just as importantly, the average discount to net asset value for LICs is much higher than usual. As you can see from the graph on this page, we measure the discount across our portfolio of LICs in the Affluence LIC Fund. And for the first 3 years or so after the fund commenced, it generally was pretty static at between 6 and 8%. But more recently, it's expanded quite a lot. And as at the end of April in 2020, you could buy our portfolio of LICs at a discount of around 20% to the underlying NTA. In other words, you could buy a share in an LIC for roughly 78 cents and have $1 worth of underlying value. Now, when we look to construct our portfolio of LICs for the Affluence LIC Fund, we're essentially looking for three different things. Firstly, and obviously, we're looking to invest in LICs where we believe the manager can deliver above market returns or outperformance. We call them alpha generators. Secondly, we're looking to capture some above average discount. So what that means is essentially we're looking to buy an LIC at a larger discount than it might normally trade, and conversely to sell that sometime in the future at perhaps a smaller discount than might normally be the case. And finally, there are specific opportunities that crop up in the LIC space from time to time, things like mergers, wind-ups or changes in structure which can create specific purchase opportunities. Once we've identified all of those opportunities, we then take a top-down approach. We look at market valuations, the spread or diversification of our portfolio, and we use these factors to decide the final components of our portfolio and the final weightings. And that leaves us with a portfolio of LICs, generally between 20 and 35 LICs in the Affluence LIC Fund. At 30 April 2020, the portfolio was around 31 LICs. You can see from the graphs here, the portfolio is quite diverse. At that stage, we were carrying cash of around 8.4%. You can see by way of discounts, around 66% or 2/3 of the portfolio was trading at a discount of 15% or more, and 25%, 24% between a 5 and a 15% discount. You can see also in this page the different equity strategies. So we had a lot of long only traditional managers, but also quite a few absolute return funds, market neutral and other diversified types of investment strategies. The portfolio was also quite diverse by market cap. So we had some quite small LICs at one end, less than 50 million. And then at the other end, we had some which were between 500 million and $1 billion. Geographically, the majority of the portfolio, or again around 2/3, is focused on LICs that invest in Australia, and the balance is focused on LICs that invest offshore into other markets. So the end result is a very diversified portfolio of listed investment companies by manager, by investment strategy, by geography, by market cap, and by discount level. Now, quite an important part of our investment process is the ability to use our discount capture strategy to add some value. And the way to think about that is that over and above the returns that the portfolio of LICs themselves are going to generate, if we can do discount capture well, we can capture some extra returns as well over time. Now, the simple example of that is if I were to buy an LIC today at a 15% discount to its net asset value, so 15% cheaper than the value of the assets that it owns, and I were to sell that sometime in the future at, say, a 5% discount to net asset value, then I've managed to achieve an extra 10% returns. By that discount narrowing, going from 15% to 5%, you've had an extra 10% returns over and above whatever's flowed from the LIC itself by way of investment returns and dividends. Now, depending on how long that takes, that can be significant. But even if it took 5 years to generate that additional 10%, that's equivalent to an extra 2% per annum. And that's quite significant in the context of where long-term returns are. Now, the discount capture is intensive. It's something we do. We focus a lot of effort on, and we have a model we use to try to predict in real time what the current net asset value is for around 80 or 90 LICs that we monitor closely. It's quite intensive, and we do change the portfolio a little bit. It's not something that you could easily replicate yourself, but it does give us a little bit of an advantage in that LIC space, and as I said, allows us to perhaps have another way to add value over time. Another feature of our Affluence LIC Fund that many of our investors do appreciate is the fact that the fund has performed reasonably well in down markets. And so there's a lot of data on this slide, but in the graph you can see the grey bars showing the 10 worst months for the ASX 200 index since the fund commenced. And alongside that, the orange bars are the performance of the Affluence LIC Fund during that same month. So at one end you can see in March 2020, where we had that extreme minus 20% return in the ASX, the Affluence LIC Fund fell by just 8.3%. Importantly, in all 10 of those worst months, the Affluence LIC Fund did better than the market, and in 4 of those months, it actually went up slightly. Now that's important to us. If we can achieve that sort of return where we generate a lot of our outperformance in negative months, then that can help enormously over the long term, but it also helps our investors to get more comfort from knowing that hopefully we're going to do better than average in a down market. We also target regular distributions in the Affluence LIC Fund. We target a quarterly distribution and we aim for that to be around 5% per annum. Generally, distributions are paid around 10 days after the end of each quarter, and historically we've managed to exceed our 5% per annum objective, with distributions averaging around 6% per annum. Now obviously distributions are not guaranteed, but we source these from both the underlying dividends that we receive from the LICs that the fund's invested in, plus harvesting capital gains over time from buying and selling LICs through that discount capture strategy. In addition to the income, like all managed funds, we also accumulate all of the franking credits that flow up from the LICs the fund owns during the course of the year, and we pass those on in full at the end of the year to our investors by way of a franking credit. And these have traditionally in the past added between 0.5 and 1% per annum to the returns you'll see here as an additional franking credit. Here we can see the objectives and the outcomes that the fund has delivered since inception just over 4 years ago. So we have delivered total returns around 7.7% per annum, and that's 2% above the returns from the stock market during that same period, as represented by the ASX 200 index. In addition, you'll see that over the last 12 months, the LIC fund has delivered a positive 3% return, whereas the market's gone backwards by 9.1%. So, and again, I talked earlier about the fund doing perhaps some of its better work or the largest outperformance when markets are going down. Conversely, if markets were to scream ahead very quickly, it's likely that our Affluence LIC fund would struggle to keep up. All through that period, we've managed to maintain a fairly diversified portfolio of generally between 25 and 35 LICs. We've managed to average distributions of around 6% per annum, and we've managed for volatility, or the ups and downs along the way, to be significantly lower than the ASX in general. So in summary, the things we like about the fund, the things we think are potentially attractive to investors. Firstly, our interests are aligned. We co-invest in the fund with you. We charge a fee based only on performance. And this is a limited capacity strategy, which I haven't mentioned, but we will close the fund at least to new investors when we feel we've reached investment capacity. There's a wide range of very good LICs out there. We think we can construct a very diverse portfolio with access to many exceptional managers. We focus specifically on this space, and we believe our discount capture strategy gives us an extra way to add value. Markets right now have corrected quite a ways, and so the combination of that and the increased discounts is providing a pretty good potential entry point. We're also seeing regular income flow through from the underlying dividends plus our discount capture strategy, and we're targeting a 5% per annum distribution. And obviously the return history for the fund so far has been pretty strong relative to the market, notwithstanding the fact that those discounts have actually blown out over the last couple of years, which normally would be a bit of a headwind for us, but we think going forward will be a bit of a tailwind. So that's a brief rundown of the fund and where it's currently positioned. If you'd like to know more, of course, you can visit the dedicated Affluence LIC Fund page on our website. You can download the PDS and various other documents, look at the fund's performance, monthly updates, and also register as an Affluence member to log on and view the portfolio in more detail. If you'd like to invest, you can follow the link to invest now on our website, where you can either apply online or download the relevant application forms. The minimum initial investment is $20,000, and applications and withdrawals are accepted monthly, generally on the last business day of the month. Of course, before investing, you should read the PDS and consult your financial advisor if you have one. Finally, if you're not ready to invest yet, but you would like to keep in touch, please subscribe to our monthly e-news on our website. We send a monthly email generally around mid-month, which includes details of all of our funds' performance, portfolios, some educational content, some interesting things we've seen from the world of investing, and some profiles of managers and LICs that we invest with. I hope you've enjoyed that brief run through of the Affluence LIC Fund. Of course, if you have any questions, you're more than welcome to contact us in whatever way suits you best. But in the meantime, thanks for watching, thanks for listening, and have a good day.